Well, here we are, recording this on April 30th. It's a Thursday, here at about 4:05 p.m. in my humble abode here in Las Vegas. Some people would call this the most lit city in the world, man, but not when the strip is closed, okay? So recording this video, and what we're going to talk about here today is, will the stock market crash in May of 2020? Are we setting up for a stock market crash in May? And what about through the summer? Okay, I want to give you my perspective. I'm going to give you the facts first, then we'll get into my opinion and we'll go from there. Okay, so hope you guys enjoy this video. As always, make sure you smash the thumbs up button, leave me a comment on what your opinion is on the state of the stock market. I would love to hear from you guys as well down there in that comment section. Okay, now if you've been in the stock market for any amount of time, you've probably heard this expression before. It's sell in May and go away, okay? And it's an expression, I don't know when it got popular, but you know, I've been in the stock market for the last, 12 years, and they always talk about this. Every time when you kind of go into May, they talk about sell in May, go away, and it basically means sell your stocks, come back after the summer, rebuy stocks, okay? I don't believe in this. I've never done this, okay? But it's a famous expression, and you know, it is what it is, okay? But we're really going to talk about the stock market crashing. That's our focus for this video. So let's start with the facts, okay? The facts. NASDAQ is down less than 1% year to date, okay? Keep in mind, the Rona, once in a 100-year event, and the NASDAQ's down less than 1%. The S&P 500 is down less than 10%. A once in a 100-year event has hit the world economy, and the S&P 500 is down less than 10%. Okay, let's go through some more facts. Another 3.8 million people lost their jobs in the US last week as the Rona continued to batter the economy. The pace of layoffs appear to be slowing, but in just 6 weeks, an unprecedented 30 million Americans have now sought unemployment benefits, and the numbers are still growing. The latest figures from the Labor Department released on Thursday showed a fourth consecutive week of declining claims. While the trend is encouraging, the rate of losses means U.S. unemployment is still on course to reach the highest levels unseen since the Great Depression of the 1930s, okay? Let's go ahead and look at this chart here. So this shows you December unemployment, the actual number right around 3.5%, January number around 3.6%, February 3.5%. We had a very healthy economy. Things were looking pretty dang good. Let's put it that way, okay? Strong, strong, strong. It was a year to be excited for. And then things started to falter as Rona took off, the economy started to close. March unemployment hits 4.4%, which is quite a substantial, move up from February, but it's nothing, okay? We're looking at April unemployment likely to come in at 20% plus, okay? Real unemployment rate of 20% plus. May, and this is assuming that at some point in May, whether it be in the middle of May or the end of May, some companies get back up and running. The economy starts to open back up. Even if that happens, likely the real unemployment rate will be somewhere around 25%, if not more than 25% in May, okay? And assuming the economy restarts at some point in May of 2020, then likely June and July could see some sort of declines in unemployment rate. But the key word is it does have to restart in the month of May at one point, and we still don't know how that's going to shake out. And the other key thing is we don't know, how fast things come down. If, let's say, the unemployment rate's at 25% when the economy starts back up, does it start to fall to like 22%? Is it like, does it fall to 20%? Does it fall under 20%? How does all that shake out, okay? So that's just what we know. And what we also know is, hey, if this happened in the United States of America, people are losing jobs massively, right? Businesses are seeing declines, obviously because of Rona, then this is happening likely worldwide. It's not like this is just the United States and this is only one hit. No, this is likely happening worldwide, every country in the world. And keep in mind, a lot of these corporate earnings, a lot of these companies that are global companies can get 10% to sometimes even 30% of their EPS and their revenue from countries outside of the United States, outside of Europe, and outside of China. So which means some of these other countries, they don't have as good of systems in place to kind of handle a situation like this. So those countries and those job losses and the possibility of those countries struggling a lot over the next few years could absolutely hurt corporate earnings for several years out, okay? So look at some more facts here. US GDP shrank 4.8% in the first quarter amid the biggest contraction since the financial crisis, okay? And keep in mind, it's almost a guarantee that the number we're going to see next quarter is going to make that number of 4.8% look like just a small, insignificant number. Like almost every economist out there has the GDP going down between 20% and 40% next quarter. Negative GDP numbers like we've never seen in modern history, okay? Google McDougal to cut marketing budgets by as much as half. Directors warned of hiring freezes. Man, oh man. I mean, when you see Google pulling back, you gotta get a little bit scared, okay? When you see a headline like that, there aren't that many headlines that could really strike some fear in you. But goodness, when you see Google McDougal say we gotta pull back a little bit here, we gotta cut our marketing budgets by as much as half, and we're gonna think about, hiring freezes. You see stuff like that from Google McDougal, you should be a little worried, okay? A little worried. That's Google we're talking about. Arguably the best balance sheet company in the entire world. One of the strongest companies in the entire world. One of the most profitable companies in the entire world, okay? What about Jeff Bezos, the richest man in the world? What did he just tell his shareholders? Jeff Bezos tells shareholders to take a seat, okay? To take a seat. He says, don't even worry about profits here over the next year or two. Don't even worry about them, okay? Because we're not gonna focus on profits for a while, okay? And when you see Amazon going into invest every dime we have back into the business, that basically means there's opportunity that Amazon sees out there because of a lot of weakness in a lot of markets, and they say we got to go ahead and take advantage of this, okay? And Amazon did this for years until really like the past few years. Amazon started to focus more and more on profits. But now, here we are in a really tough situation, and what is Amazon doing? They're going to invest every dime that comes in on this business right now. They're going to worry about growth and growing during some tough times. Jeff Bezos is like, shareholders, take a back seat for now, okay? Don't think about profits. We're not going to be having the profits coming in anytime soon, okay? 9 out of 10 companies in S&P 500 are being hurt by this. Let's be very clear. Maybe for every 1 out of the 10 companies in the S&P 500 that is somehow benefiting from the Rona situation, there's 9 companies that are like, they're going through some struggles. Some of these companies are seeing revenue declines of 10, 20, 30%. Some of these companies have had their businesses completely shut off where they're going to actually see revenue declines of 50, 80, 100%. This is massive. Now, if it wasn't bad enough that most of the stocks in the stock market are likely going to see their earnings, their revenue, everything decline massively, on top of that, you got to add on to the fact that most of these companies out there, most of these public companies that you and I are invested in, right, or we could invest in if we wanted to, right, their debt loads have gone where? Up massively. Almost every single one of these S&P 500 companies has added massive amounts of debt to their balance sheets, okay? They've either issued more shares out there, they've taken out bonds, they've taken out bank debt, they've basically drawn down on their credit facilities because they're just trying to make it through to the other side when their business can actually open back up, okay? So meanwhile, all these companies you're buying into, they've all got worse balance sheets than they did before. Unless it's some special situation where some company that just, like an FB, like maybe a Google McDougal, like an Apple, something like that, where it doesn't matter, they're going to make a lot of profits no matter what, they just won't make as much. Unless it's one of those special situations, a Costco maybe, a Kroger, a Walmart, something like that, one of those special situations. Outside of that, all these other companies are increasing debt massively. And most of these companies in the stock market are seeing their credit ratings go down, which means it's going to become more and more expensive for them to take out debt. And keep in mind, there's another thing. Not just that a lot of these companies have taken out debt, a lot of these companies have been desperate to take out debt. So which essentially means the interest rates they're going to have to pay on the money just to get through to the other side is substantial, right? I saw this, the biggest example of this was, a company, unfortunately, I was involved with and still am involved with, CCL, right? They had to take out debt just to make it to the other side at 11.5%. That's ridiculous, okay? Before they could have probably taken out debt for 4 or 5, maybe 6% would have been high for them. Then all of a sudden you have to pay 11.5%. You have to do it because you're desperate. So almost all of these stocks in the stock market are have worse balance sheets than they had literally 2 or 3 months ago. And that makes them what? Not as attractive, okay? Growth of the Fed's balance sheet slows, hitting new record of 6.7 trillion in latest week, okay? The Fed's balance sheet is now at a record of 6.7 trillion. We know the Fed's trying to backstop everything. We know, the Fed's is trying to do everything in the Fed's power to basically try to help this situation. The only thing is, at the end of the day, what's going to have to happen is the economy is going to have to open back up, and everybody's going to have to go spend money at all these businesses and corporations again to get things back on the right track. The Fed can't make somebody go and want to go to the baseball game and go spend money and do that. The Fed can't make somebody want to buy a new, $1,000 flat screen TV or something like that. The Fed can't do that. They're trying to do as much as possible to help, and they're adding to that balance sheet ridiculous. And I know a lot of you guys have probably seen this meme. Let's put this meme up, okay? The J Powell, this is popular in the stock market community right now. And it's, they're trying to do everything possible to help out with the markets and to help out with this situation. But the fact is, the Fed's balance sheet is just getting to ridiculous levels, and it's probably going to continue to climb. There's a lot of talk that it could go to 10 trillion with a T. It's unbelievable, okay? So let's do a little scenario here, okay? Let's say I fell asleep for 2 months. I don't know, I went into a coma, or I don't know, I went to bed and I just couldn't stop sleeping. And I was asleep for the last 2 months. And here it is, it's April 30th. You wake me up and you just tell me everything that I just went through on those slides. You tell me about the unemployment, you tell me about GDP, tell me about all the debt that companies have taken out, how the fact that corporate earnings are down massively. You just run through all those slides we just ran through, okay? And the first thing I'm going to do is I say, I'm never sleeping again, okay? What the heck? I go to sleep for 2 months and just the world falls apart, okay? I'm never sleeping again, okay? And then you go ahead and you ask me, you say, Jeremy, how much do you think the stock market is down? I just gave you all that information. And so I'm like, dang, I've been asleep for 2 months. Let me start, probably 50% plus. Yeah, based upon what you just told me, I would say the market's down 50% plus. The Dow was at, 28,000 when I went to sleep. So I don't know, it's probably at 14,000 now, maybe 15,000, somewhere around there, roughly. That sounds about right, okay? And then you say, Jeremy, here's the situation. The NASDAQ's down 1%. The S&P 500's down 10%. I would laugh at you. I'd say, quit playing with me. There's no way. Based upon what you just told me, there's no way possible the NASDAQ is down 1% and the S&P 500 is down 10%. You're like, Jeremy, let me pull it up on my tablet here, okay? NASDAQ down 0.93% year to date. S&P 500 down 9.85%, okay? I say I'm going back to sleep because nothing makes sense anymore. Nothing makes sense. I might as well just go back to sleep at this point because that's just ridiculous, okay? Absolutely ridiculous, okay? So that's a fact. So let me give you my opinion, okay? The market needs a rough summer. We need to see the market go down. I'm going to be quite frank with you. We need a rough summer. We need volatility to come back. We need worries. We need the doom loop to get going again, the negativity out there. It's what's actually needed in the market. Usually I say that's, we don't need that stuff in the market. But right now, I'm 100% on the train that we need negativity in the market. We need the market to go down, the stock market. Not just because I want to buy stocks for cheaper, but just because these valuations, they don't make any dang sense on a lot of these companies right now. And the fact that the market's starting to price in a best case scenario is a little scary. Here's my opinion on this. Unemployment's probably going to stay up, up above 10% for 1 to 3 years. I think 1 year from now would be best case scenario that unemployment gets under 10% again. I think it's going to be really hard to see. Well, keep in mind, when the economy starts back up, it's not like everybody's just going to run out and spend all this money all of a sudden. And it's like, oh, everything's back to normal. That's not the way this is going to work. A lot of people, especially if they have any type of, negative health condition, or they're just worried in general about getting Rona, they're not going to go out. Especially if we start to see cases go up and up and up. A lot of people are going to say, no. So unemployment, in my personal opinion, the best case scenario is it gets under 10% in a year from now. In my opinion, it's more like 2 to 3 years out, and we could see unemployment under 10%. It's going to be a while. And when you're talking about double-digit unemployment for 1, 2, 3 years, you're talking about a really weak economic situation, okay? That's going to be, keep in mind during the great financial crisis, unemployment was above 10% for only like a few months. Like it wasn't like it was an extended period of time. In this situation, I'm looking at least 1 to 3 years in my personal opinion. I would be shocked if magically, the economy opens back up and all of a sudden unemployment's back to, 5, 6, 4% again. Like that would just be ridiculous. And it just doesn't make any dang sense, okay? Corporate earnings, I think they're going to take at least 1 to 3 years to come back. At least, okay? And keep in mind, this is just coming back to where they were at. I think it's super unrealistic. If people think all these companies in the S&P 500 are all going to have amazing earnings when the economy does open back up, okay? I own some stocks that are hit severely by this. Wynn Resorts would be a great example, right? Macau GGR is awful right now. Las Vegas Strip is still closed. Wynn Resorts is not going to see earnings, in my opinion, back to 2019 levels for at least 2 to 3 years. And I'm fine with that. I'm willing to hold that stock. But do I want to go buy the stock here today? Heck no, I don't. I'll hold it, but I need the stock a lot lower based upon the fact that it's going to take, probably several years, if not longer than that, for the company to get back to where it was. So, I think the stock market thinking corporate earnings are just coming back here overnight. It's unrealistic. It's not going to happen, okay? Dividend payments. We know a huge portion of the market loves their dividend payments and they invest for those dividends, okay? And what do they go ahead and do usually with a lot of these individuals and funds that get the dividend money? They go ahead, take that dividend money, reinvest it for more and more dividends, right? But here's the facts. Dividend payments are going to be limited for the next 2 to 5 years in a major way by most of these companies. Yes, you're going to have the special situations like an Apple stock that will continue to up their dividends because it's Apple, okay? And you'll have other companies as well that have really low payout ratios and are still going to be very profitable even if we have a recession that lasts, a few years. You'll have definitely some companies that, man, they're paying out dividends, but most of these stocks, they're going to have limited dividends. A lot of these stocks have suspended their dividends and probably won't bring them back for at least 1 to 2 years from now, okay? At least 1 to 2 years. And when they do bring them back, they're probably not going to fully bring them back. Meaning that if they were paying, let's say, 50 cents a share, when they bring it back, they're probably not going to pay 50 cents a share. They'll probably pay 25 cents or something like that. So dividend payments limited for the next 2 to 5 years. Why is this? Well, earnings for most of these companies are going to be down for a significant amount of time. I just don't see any way around that. There's no way these companies' earnings just, for all of them, just fly back. It's not happening. For most of them, it's not happening, okay? And debt loads have gone way up, which means interest payments on the debt have gone way up. And if a company wants to pay off that debt, especially if they have taken out any, high interest debt, they have to go ahead and do so with the profit money that will be coming in rather than pay out dividends, okay? Earnings down, debt up, that's just a bad thing for corporations, and that's going to limit dividends. And keep in mind, some of these industries that have taken some actual government bailouts, some of them are going to have limits on how much they can pay out in dividends, just like the banks do, right? A bank can't just pay out anything. JP Morgan just can't pay any dividend they want. They have to get government approval to do that. Goldman Sachs just can't pay out any dividend they want. They have to get government approval to do that, okay? And the airline industry and some of these other industries that are getting bailouts from the government, if you're expecting huge dividends in the next year or two, don't bank on it. Maybe 5 years from now you can. Maybe 10 years from now you can. But not today, not tomorrow, not next month, and not next year. That's just facts, okay? Money velocity has never been turned off like this in modern history. Money velocity, what I'm talking about essentially is, you spending money at the local restaurant and, the restaurant makes money off that. They can hire more employees. They can expand to another location, right? The bus boy makes money off that, right? The server makes money off that. The producer that sells food to the restaurant, they make money off that, right? Maybe they got somebody that sings at the restaurant. They make money off that. And so there's all these people that make money just based upon the fact that you and other people go to this restaurant, right? And then all of a sudden they're shut down. And you're just turning off the money velocity. We've never had this happen in modern history where you just turn off money velocity for an extended period of time. It's just dominoes rolling the wrong way in a massive way. And at first, when the Rona started, it was like, okay, maybe if we shut down the economy for a few weeks, things will be okay. And then it went for a month. And now we're approaching, going to be approaching 2 months. And talk that we could have a third month. before the economy reopens. And so money velocity has never been shut down like this, guys. And this is something you really should worry about. And it should be something that we all are thinking about. Like, who knows how this starts back up? There's not you can do projections. You can hope it all comes back fine. That's just hope, okay? That's unrealistic. Now, we're also starting to get some early signs that the stock market might be ready for a big fall very soon, okay? We're starting to get some early signs here. Amazon stock. So, Amazon reports earnings, which actually were pretty amazing, in my personal opinion. Revenue beat big time. And, people had a pretty high expectations for Amazon. The earnings were strong from Amazon. They really were. The stock's down $118 after hours. Apple. I thought Apple did a lot better than I thought. I'll be completely honest. Considering the situation Apple's in right now, it's a tough market out there. And so for Apple to have reported the numbers they reported, I actually thought they were pretty dang good. For the circumstances, pretty dang good. Apple's down 2.6% after hours. When you see moves like that, and Amazon, reports some amazing numbers and the stock falls, and Apple actually reports some pretty amazing numbers in themselves considering the circumstances, and it falls as well, it could be a little sign that maybe some of those big tech names have gotten overextended, and maybe overextended quite substantially, and they're honestly ready for a big fall, because there's just, there's not that much more momentum in those names. It's been played out. It's been played out, okay? Look at Tesla. Tesla. It went from a situation, this stock opens 870, it was looking great, and after hours yesterday it was up like 10%. It opens up big, and the stock slowly starts to fall, and then it just continues to fall for the rest of the day. It just completely keeps falling for the rest of the day, and it goes from a situation where Tesla stock was up huge to being down. And we know Tesla stock is, I don't want to call it one of the faces of the stock market, but honestly, it is one of the faces of the stock market. Like, it's one of the most talked about stocks. It's one of the most exciting stocks in the market. And for a stock like that to show that type of weakness throughout the day and just selling and selling throughout an entire trading day, and for it to go from $870 to $780 at the close, and by the way, after hours is down to $765. This market might be played out a little bit, okay? This market might be played out a little bit. Keep in mind, if we pull up a 2007 through 2009 stock market chart, this was obviously during the Great Recession. What do you see there? You see the market had several bounce backs where it looked like, okay, we're coming back. It's getting better. And then you'd have a big fall. And you'd be like, okay, that was it. Now we're coming back. Look at up and up and up. And then a big fall. And you had that happen, 5, 6, 7 times from basically when the recession broke out to where the stock market bottomed in March of 2009. You had it happen several times. There were a ton of rallies that lasted either a few days or a few weeks or even like up to a month or so. And it looked like, oh, everything's good. And so that's what I definitely think is possible we're in right now. We're in one of those situations where it's like, oh, everything's fine. And then all of a sudden, boom, the next big drop happens. That happens many times. The fact is, soon the truth will come out. Soon the truth will come out. The truth can't come out until once these economies open back up. That's the biggest thing. Keep in mind, a lot of these analysts have not brought down their S&P 500 numbers that much because they have no clarity. And what are we hearing from most of these CEOs of these companies, most of these executives? They have no clue. They have no conception of what they're going to have for revenue, EPS, net income, anything right now. Most of these guys don't, because they don't know when the economies open back up. When it opens back up, they really have no clue how strong or weak their business will be. And it's not their fault. There's too many unknowns right now. It's just facts, okay? So soon the truth is going to come out. And unless the truth is amazing, which the stock market's pricing in like an amazing situation, be ready for a big fall in this market, okay? I think everybody thinks, whoa, when the economy opens back up, that's when the market's really going to start going up like crazy. Shh, we'll see about that, okay? We will see about that. Just like everybody thought the market was going to continue to go down. The market goes down 19K, 18K in the Dow. And everybody's like, oh, look at all this bad news that's about to come out. And what happens? The market goes up and up and up. And now we're in a situation that everybody's like, oh, economy's about to open back up. Now is when the market's going to really get good. And it's like, okay, we'll see, okay? The truth. You can't handle the truth. You guys remember that? A Few Good Men, classic movie, classic line. And the truth's going to come out soon, and we'll see if the stock market can handle the truth. Now, in terms of me, you guys know that I am still holding most of my positions in the stock market. I still have a considerable amount of my money invested in the stock market. That you guys do know, and I got a lot on the sideline that I'm ready to deploy, but I am not deploying today. I won't be deploying tomorrow, and I probably won't be putting money in the market for at least a few weeks. I need the market considerably lower from now, considering the massive risks to corporate earnings for possibly the next few years. Like the stock market's just not pricing in the situation I think that's really going on here. And until that happens, I'll be happy just to hold the stocks I do have and just say, you know what, unless there's some type of special situation like a NAT stock, the oil tanker that's making a ton of money, unless there's some type of really special situation, I'm like, right now I'm just good. I'm just good. And that's where I've been for the last few weeks. And that's where I'll continue to be unless the economy bounces back super strong. I'm like, hey, everything's great again. Or unless we're in a situation where the market falls dramatically. Outside of those two scenarios, I'm not really interested in buying, 99.9% of these stocks in the stock market right now. So hope you guys enjoy this. Always let me know your opinion in that comment section. As always, don't forget to smash the thumbs up button before you leave. Thank you for watching and have a great day.